Hey, it's Andrew here, and welcome to the E-commerce Fuel podcast, the show dedicated to helping 7- and 8-figure brand owners build incredible businesses and amazing lives, and occasionally go really hard geeking out about investing, which is what we're going to do today. Because joining me today is Travis Jamison. He is a man of many talents. I don't even know if that's the right way. He does a lot of cool stuff. Very interested in a lot of wide-ranging things. You can find him at Travis.vc, where you can kind of learn kind of all about him and the different tentacles he has and all sorts of things. But he runs Smash.digital.com, which is a very a long-running experienced SEO agency. Smash.vc, where they invest in operational brands and provide capital for growth, as well as investing.io, which I'm excited to geek out about. It's a community for entrepreneurs turned investors. And met Travis, man, a long time ago, like 2000, man, almost a decade plus ago at an event in Berlin. Yeah, where you were talking about SEO and got a chance to get to know you there. And you've done a lot since then. So thanks for coming on, Travis. I'm excited to learn a ton from you on investing because you do some really cool stuff and you do it in a really unique way. So welcome.
Man, it's my pleasure. I'm happy just to chat. It had been too long.
Yeah, it's been a really long time. I want to start with investing. How long your roots are in SEO, growing your agency, online businesses, Amazon businesses, but you've been investing. How long have you been focused now on just like, I don't know if full-time investing is correct, but pretty close.
Yeah, so like I'm still an entrepreneur at the same time, but like majority of an investor. I would say it's been my main focus for 6-ish years, something like that.
Okay.
Yeah, I mean maybe a little longer, but it's been slowly whittling to more investing and less entrepreneurship over those years.
And what's more fun? Because both have their moments of terror and sheer joy. But do you enjoy more the facet of like coming in and operating the company, or at least like helping to operate like with a team, or do you enjoy really like just the capital allocation, making bets, that kind of stuff? That side more?
I think it's a really good question. I do think it is more fun when you are in the thick of your own business. When you've caught something by the tail and it's just taken off like a rocket ship, like that is when it's awesome. And I don't think investing will ever be like that. I mean, you can get the same dopamine rushes. I don't know, like, they're into the crypto bull market. Like that's pretty wild times. But like that actually burnt the dopamine receptors up. It did. But yeah, it totally did.
This is the time when like we were all checking the price of Bitcoin like every 90 seconds. You would just like cycle in and check it. I don't know if maybe I'm alone here, but
dude, I have a morning ritual of different writing and like I have Notion boards for this, and you would not believe how much I talk about dopamine. Like even like the tags you set, I have a dopamine tag where I'm like, my dopamine receptors are getting burnt out. Stop checking these things so much. I mean, I have to like, I just tweeted today about how I made a special browser, like a copy of a Firefox browser specifically for social media. And I changed the icon so it's a big skull and crossbones. And it's basically like, so I can't just casually my work browser, go like, oh, let's check Twitter real quick. No, I have to like go away because like I'm bad at it. Like I'm very susceptible to this dopamine drowning, I should say.
dude, dopamine drowning. I love that. You should trademark that because someone's going to steal that. It sounds like you do. One thing I have done is with journaling in the past, and maybe this is people are going to go and well, nobody's that interested, but you could potentially go to ChatGPT and ask specific questions and find out all the how messed up I really am. But I'll take like sometimes with journaling, you don't notice the themes. And so I'll go in sometimes and like if I have a big decision, I'll be like, hey, ChatGPT, here's a bunch of kind of journal entries over the last year, 18 months. What are some of the themes that I've complained a lot about? What are some of the things I've been really happy about? And you can't tell always when you're like right in the thick of it. But then when it comes back and it's like, oh, you've complained about X, Y, or Z in 80% of your posts, or this has made you happy in 70%. Sounds like you're doing something similar with tags for journaling. Is that right?
Yeah. So the way I have a morning one and a nightly one, and I don't do the nightly one every day, and I don't do the morning one every day either. But basically put the title just says morning journal, like this, the template, and then has a headline. And the headline I put like what's going through my head, and then I have tags for that. And so you can very much like easily sort by the tags and see like, oh crap, there's been a lot of dopamine mentions here. But it's interesting. So, I mean, I think we've all heard the saying. I'm going to butcher it, but something like people overestimate what they can do in a week, but like underestimate what they can do in a year. Like when I look back, I think I've been pretty good at like identifying problems and then building systems around those to compensate. Like I'm aware of my weaknesses, so I build systems around them so I don't do it as much. And my dopamine addiction to all these different apps is definitely one of those that I've built systems around. And we're smart creatures, so we we build system we mentally work ways around our systems. But it's over time it's getting much better with everything.
What's one of the other, apart from social media, what's one of the other weaknesses you have that you've built like a system in to save yourself from yourself kind of thing?
So I really like checking markets, which is weird because I don't trade very often. It's just I like doing it. But so I use interactive brokers, and there's a app. It's called ScreenZen. I think it'll pop up. Let me see. Yeah, so ScreenZen. Anytime it pops up, I don't know if you can see this, but this pops up and says, "Are you sure you want to open this?" And it's like, "Yeah, I have it. Yeah, yes, I want to open it." And so I click it, and it actually makes you wait 5 seconds. And you can make it so every time you open it, it takes longer. So next time it's 10 seconds. Yeah,
Oh,
yeah. And so you're basically just annoying yourself to keep you from doing it. And it's also this little reminder. So I remember, so I had TikTok on my phone for like 3 days, a couple years ago, and
and you
it
didn't
it was one
sleep
of
for
those.
3 days,
Yeah,
probably.
it was one of those things like, oh,
Yeah.
I'm going to check it for. I'm just going to look at it real quick, and next thing I know, my phone's dying. I'm like, what the hell? What just happened? But it's so addictive. But with that, I noticed there was like a couple times when I had it on my phone where I'd look at it, and they're like, okay, I'm done, and I close it, and next thing I know, I'd opened it right. I'd immediately opened it again. Like, what? What just happened? It was like robotic. Like it just naturally happened. And so having this little like screens in app on there that just pops open, like, are you sure? It like breaks you out of your routine, so it's no longer autopilot anymore.
Well, it just creates friction too. Like one thing I'm realizing is friction is even something like you said, 5 seconds. I have like if I have to log into something in my password manager and it's not saved on my phone, even if it only takes me an extra 15 seconds, I am 90% less likely to do that because it's a pain. Like just
Yeah,
those little frictional points can like drastically change your behavior, which is kind of
yeah.
wild.
Actually, I'll let people know a secret. If you ever see me like getting a little rowdy on Twitter, it's very rare. It's like a couple nights a week. I go to this like local steakhouse, like by myself. My wife doesn't even come. I'm just sitting there. I know the bartenders sit there, and I'll download Twitter on my phone, and then I'm drinking my wine, eating my steak, and then I'm shit posting whatever. But as soon as it's done, I have to delete it, and so because if it stays on my phone, then I know I'll be on it way more. Um, and so every time I want to use it, I have to actually manually download it, log in, use the 2FA, like all this annoying stuff. And on my computer I have it, but it's a separate browser. So
Yeah, that's super smart. So you get the ritual, install Twitter, go to steakhouse a couple nights a week, delete it, and then repeat. That's I love it.
yeah,
That's cool. Just because I enjoy a good steak. What's your go-to order for a steak?
I like ribeyes.
Yes.
Occasionally, some places have really good New York strips. It's just like SDK Steakhouse in Chicago recently. Man, their New York strip, dry aged. It's so good. But ribeyes are the way.
I agree with you. If I was going to pick, ribeye is my favorite cut as well. So good. Uh, this is gonna be a weird transition from ribeyes. Interactive brokers. We're not going to talk a ton about the public markets, but what do you use them primarily because like is that the broker that you can set up margin loans against your portfolio? Is that why you use them, or are there other reasons?
Oh wait, no, I don't do margin loans. I mean, occasionally I'll get a very short term margin loan just because I want something and I haven't transferred the funds in. Like that would be the only thing. Um, but you can do margin loans on most brokerages. There's a few you can't. Like I also
And
use Chase, and you can't do it there. But go ahead.
forgive me, maybe I'm using the wrong terminology. Not like buying stocks on margin per se, but like let's say you got a portfolio and you want to borrow against it to put money
Mm,
on a down payment for a house. It's marginal is not the right terminology there.
yeah, yeah, yeah.
But the
Yeah, I know exactly what you're like. Portfolio. Oh hell, what is the name? What's called portfolio lending. Yeah, I know what you're talking about. Yeah, you're borrowing money from your portfolio, then like not to buy stocks, but to buy other stuff. That was the original reason I went to Interactive Brokers because they have by far the best rates. And so the rates on Interactive Brokers are always, or historically, have always been lower than mortgage rates. And so
mm,
one could, in theory, like a couple years ago, I was saying like, hey, just borrow against your portfolio and don't get that mortgage. Well, the thing about the mortgage is mortgage rates are locked in. Portfolio
mm-hmm.
margin rates are not locked in. As for interactive brokers, it's by far the best platform in my opinion, but it's also by far the most complicated. And there's a lot of it's made for traders. It's made for the big leagues, and that's not necessarily me. Like I don't need all these fancy features that they have, and it confuses me sometimes, but it works.
Yeah. How much do you invest in? I asked you what you were most excited about before it kicked off, and you were you're most excited about the investments you're making that are outside the public markets into businesses and things like that.
Mhm.
Um, what, how much do you invest? If you think about your portfolio you're investing, how much do you invest in those type of businesses, smaller businesses, off market, private? I'm guessing the majority of them are below 10 million, even probably below 5 million for most of them. I'm guessing, versus other things, stocks, bonds, equities, real estate, things like that. Because you've always the trade off too, right? Like you invest in index funds, and your returns can be lower, but it's completely hands off. And I think people underestimate sometimes when you make those private investments, depending on how you set it up, of course. But sometimes the amount of time and logistical complexity, like you're paying in part for that additional, like that beta that you're getting above the market returns, right? So,
Yeah.
what's your split there?
Uh, I don't know right now. I could pull up my Kubera. Also, that's a tip for everybody. Kubera, KUBERA.com. Great portfolio tracker. So many of them are so complicated. It's like a spreadsheet, just a little bit better. It syncs up with stuff. Best net worth tracker that exists, in my opinion. Because you can
Ooh,
add, yeah, and because you can add in, I assume you just pulled it up and looked at it. It's great. But
I
you can
did.
also add in like all of the portfolio trackers or net worth trackers try to automate too much, and this one just lets you put in lines. Because like, how am I going to like value the business, like the value of my e-commerce business? Well, I can't just sync that up with an API. No, I just manually put that in, and you can adjust it, and you can like separate it. It's easy to see all the different segments. So I've got, I can pull mine up. We can talk about it. Let me
I'm
see.
I'm liking this because I do this. I go through this exercise maybe once every 2 or 3 months, and I have this super hideous Excel spreadsheet. Because yeah, there's like
Yeah.
Wealthfront has tried to do it, and then there's Mint, and there's all these things. But for whatever reason, I always find they don't sync well, or I can't customize
Yeah.
them enough, and so I just went to the Excel doc.
This one's so easy to go to my. So, my yeah, like the average 9 to 5 employee at a bank and like what I have, we need very different tools. And so like Kubera lets me separate a lot. So I have like my cash. These are different like categories that I've set up. Cash, my treasury bills, my equities, cash like I would say, real estate, my private businesses, venture, private equity, and then like there was crypto. So and you can keep on going for as much as you want. It's really lovely.
Cool, Kubera. I'm gonna check that out.
Yeah.
Um,
What was the
yeah,
question?
talk about a little bit
Oh,
about, and even if you don't know the exact split, that's not a problem. I'm kind of most interested in how you invest in those, and so you do that through Smash.vc and Travis.vc. What's kind of like your thesis for, or what do you love to see in terms of how you invest in these smaller companies?
all right. So I know that I think I'm probably an expiring entrepreneur. Like I'm not old yet, but I'm not young either. And there's kind of so in the movie or the show Succession, there was this scene that kind of went famous about. I don't remember the characters' names, but the one dude was talking about like, oh, like grandfather basically said like I'm going to get $5 million, like I'll be good, and the two brothers are like poking fun of him. They're like $5 million is the worst amount of money because it's too much money that for you to like work and do normal stuff, but it's not enough for you to like do whatever. And so I know that I've been cashed up enough so that I don't have the same drive in me that I always did. And
Hmm.
so with that, I'm trying to replace the small business section of my portfolio with these like investments in small business because I I 100% believe like the best returns out of any asset class come from owning a small business. They do on average. I mean, you could like get really lucky with an angel investment, but like on average, like that's the best. But the downsides are, of course, they take a lot of work. They take an insane amount of work. They're risky. It's far more riskier than like an index fund or something like that. And so the way I'm approaching it is uh, taking my wealth from like my other companies that I built and sold, and the companies that I still have, and driving them into deals in a whole lot of different small businesses. So I'm able to significantly reduce the risk by spreading them out. I want to have 30 and 40 small businesses in the portfolio. And then the returns will still be great because I'm just getting small business returns. Like they're fantastic. And the biggest thing to me is I like cash flow. Like I, in general, won't invest in any small business deal that doesn't give me cash flow from like day one. Almost like I'm not a growth guy. Like I
Mhm.
very much barbell my portfolio. I'm either going to invest in like portfolio or like companies that can give me 100x return, venture style stuff, which I rarely do anymore. I think the market's mispriced, or companies that are going to like provide me cash flow. And some people would say cash flow doesn't make sense, that you should just focus on like the amount of your equity going up. But I like cash flow. Sleep well at night.
So if you're, let's say, sake of argument, you expect to make 10% on average in the S&P over a long period of time. What are you seeing in your private investments for stuff like this HVAC company? Obviously, they vary a lot based on the individual one, but what's your average you're seeing across a portfolio for these type of like private investments in small businesses?
So a lot of these deals, you're probably looking at uh 30% IRR. Yeah, overall. And it and that's an average. Like I basically look at, I want a 20 to 25% a year return um out of the gate with these. But what you also need, like, you invest in an index fund, like you're liquid. You invest in these, like I'm
Hmm.
not liquid. And when I invest in these, like I go in the understanding, well, I would prefer to just hold the business as long as possible, so I don't have to like redeploy that capital. And one day when they want to sell it again, then I'll exit with them. But otherwise, I'm just in it. So like that's a trade off. And they are risky. So like this HVAC deal, the returns will be great. Like year one projected like 16% cash returns. Year two, more than that. By like year five, I'm looking at like, I don't know, 55% a year cash returns, like on that my initial investment. Because we're also paying down the debt, so there's more
Hmm.
cash available. So these things look beautiful if you can get them. The hard part about all this is actually finding the deals. That is the hard part.
When you split up the equity chunk, so let's say, sake of argument, just to make the math easy, uh, billion. Let's say the business costs $2 million, $1 million loan. You're bringing 500K. The other person's bringing 500K. Are you splitting up the equity? Because you can do it a couple ways, right? Like if he's going to be operating it, and he brings the cash, maybe pulls a salary. If you have a good salary, then you can compensate for his time separately, and then you have the equity, which is really pro rata based on what you bring together. Other times, sometimes you can deal will work any way you negotiate it. Are you
Mhm.
cutting up the company evenly based on how much you're bringing in capital versus he is to the table?
Um, so again, most of these deals like come to me like with terms already,
Yeah.
on average. Uh, but a lot of times there's a step up, meaning I put in $100,000 worth of capital, they give me $200,000 worth of equity because they need to attract investors. They have to sweeten the pot. Most of these deals, like they're getting a salary. So in like that type of deal you just explained, they'd probably take 100K salary out of that, as they should. Most of the time they'll be working in the biz. So yeah, that's how it works. There's no right or wrong way, and I'm very open to a lot of different things. It kind of depends. Like the riskier it is or something like that, like you have to have more sweeteners. Like the better it is, like the better just the business is in general. Like you don't need sweeteners.
Yeah. What do you, I mean, you mentioned cash flow. You love cash flow from day one, which yeah, I think that's obviously super smart. What other things are you looking at criteria, either in terms of the business or the operators? Like, I'm sure you have a checklist or at least some kind of filtering list, because if you don't, all of a sudden, like it's just, if you don't have some kind of criteria to filter out opportunities, you spend all day looking at deals. So what are you filtering by?
You'd be surprised at how much I don't have a filter. Well, I mean, I have some. I don't look at them as much as I should, uh, but because I'm very like business agnostic. Like I don't have a niche. I don't have anything. I think I do have I think I have an above average nose for these things, like
Hmm.
instinctual like business sense, and I think that's kind of helped me with a lot of things. It's failed me from time to time. Let's not kid myself. But it's more like if I add these rules in there, and then every business is completely different. Like, how do you do that? So with that, I mean, I pass on the vast majority of deals I see. It's not like I'm hopping on everything. Like I say no all the time. There also has to be they have to be big enough. If they're too small, there's not enough capital to do things. There's not enough capital like hire a CEO or pay the operator salary and stuff like that. So it's all these things, but it's hard to really put these in rules. I feel like.
Yeah. Do you have, for people that are listening, they're thinking like, hey, wow, this sounds kind of interesting. This Travis guy seems like he might be a good fit for on the cap table. Um, do you have any, like, in terms of check sizes you like to write, or in terms of business sizes? If someone's listening to this and thinking, hey, I should check this Travis guy out. What's any kind of who you're a good fit for, so they can maybe take that last step and head over to Travis VC or Smash VC and check you out?
Yeah, I mean, do you have a sustainable business that generates cash? Like that's basically. I mean, my check sizes. I'll go as low as 50,000, uh, as big as like 500,000, like 200, 250. That's kind of like my sweet spot. I'm like pretty comfortable with that, and I'll have to like stay up at night thinking about it. Um, Man, it sounds silly, but yeah, it's I don't know.
No, you get an eye for value and sustainability, and that, I mean, totally makes sense. Um, Kind of a big question, but I'm gonna put these two into one. Best investment and worst investment. What were they on each of those sides? And did you have any lessons from each of those?
Hmm. Uh. So one of one of my best investments, and this is not in like overall returns. Well, no, this is not in like total cash returns, I should say, but in like several years ago, I invested in a marketing agency, and not a competitor with mine. And um, now that every single year, just the amount of dividends I get is equal to what I invested in it. So, really, really good returns. And this is, I don't even know how many years this has been going on at this point. Uh, and that one really came down to the founder being super nerdy about the product, like what he's in. And I don't mean nerdy in like a negative way at all. I mean in a very beautiful way. Like I love listening to him talk about this stuff. Uh, I think it's hard to replicate that. So when I look at say like I'm still involved in SEO and stuff like that. And I look at these sites that are trying to just scale tons and tons of content, and sometimes they work. But I think if you have like one person in like one niche that just is just obsessed with it and just like focuses on this one thing over and over and over, like they're really hard to compete with.
Hmm.
And so this is that type of thing too. Like in that case, like man, it's I don't know how you compete with this guy. Like maybe I mean there's companies doing a lot more than him, but in terms of like his specific niche, like that's great. So the founders are just winning all along. Deals that have not worked out well. There's plenty of them. The early ones was when I was trying to do this myself without the operators. Like I found out real quickly, I don't scale. I don't scale at all, and I also found out that I'm not really suited for buying businesses because I think when you buy a business, you have this like this painting in front of you that's almost finished. You need to just like make it better. And that's not where my skill set lies. My skill set is very much in like creating things or allocating, but like really like I'm the creator of the entrepreneur. I'm better at getting it 80% done and then passing it off to somebody. And so that's where I failed. The other failures, there's not a common thing. I think probably the biggest one is assuming that everything will carry on like it has been.
Hmm.
Um, anytime I see like a presentation and they're really hyping up like all these growth opportunities in the business, I like discount most of that. I think Brent Beshore said something like, small businesses don't stay small on purpose. Like maybe occasionally you get one where they just didn't know what they were doing and couldn't grow it. But overall, I feel like that founders are trying a lot of stuff and it's just not growing. And so I discount a lot of that growth.
Quickly, for last thing before we move on from investing and kind of start wrapping up, but you're most excited about, obviously, private markets, small businesses. What do you see anything in the public markets? And this could be, and I say public markets very broadly, like equities, real estate. I know you do a little bit, you do something like VC and private equity. What of those four, or there could be multiple things, do you think is interesting right now or has good opportunity?
Um, so I actually am one of those people who try to time things a little bit. But instead of me trying to like time them exactly, I try to just look at I try to zoom out and be like, that's Howard Marks says, like where in the pendulum swing are we? And so sometimes, in 2021, early 2022, I was like sounding the alarm bells. I sold off so much stuff because you could just see like the pendulum had swung too far to craziness. Right now, I don't think there's like some really easy, great call that I can make with anything. I think probably, the best move is just like to sit down, write your investing thesis and find out what sort of like allocation breakdown makes sense to you and your portfolio. And then just always make sure that you're kind of rebalanced to that. So, I'm DCAing every single week into all kinds of different stuff. I will say, in terms of like PE and venture, I am not allocating any to that right now. PE, I could see having a big mess. Now, there's always like, PE is very general. There's some like all kinds of interesting distress stuff that they could be doing, then that could be awesome. But the traditional stuff, no. Venture, I think I stopped allocating to venture in like 2018 for the most part. Like occasionally I'll do one. I just think it's mispriced. It's a mispriced asset. There's too much capital going to it, and I think we saw the last couple of years, like the valuations ran crazy, and now so many of these companies are underwater, like versus their last round, and a lot of companies like raise enough so that they haven't had to raise new money until like the end of the year, early next year. So we're going to see a lot of markdowns, and I just don't. I think it's mispriced right now. I don't think venture is a bad thing. I just think there was just too much money, too many people trying to do it, too many companies that shouldn't be funded. And it's not that they shouldn't be funded; they weren't venture scale. Like you see a lot of companies being funded that, like these are like cash flow businesses. Like they are not going to get to $100 million. They are not going to get to $1 billion valuation. They are not venture scale. And so I just stepped away from it.
Completely changing gears here. Last thing I want to ask about is like again SEO. Like that's your roots. You know that world super well. What's your take on the SEO landscape? Because I've been in SEO for, it's been either in the weeds with it thickly or kind of removed from it, but with some history, and not nearly to the extent you have, of course. But yeah, for the first time in a long time, I'm really questioning like if the investments there make sense given everything that's going on in the world with AI, with content, with just Google. What's your, and obviously you got an agency here, and I'm sure you're doing really well with clients. But what's your kind of like broad lay of the land in terms of SEO, where we are, opportunities, payback periods, all that kind of stuff? It's a big question, but throw it out there.
Yeah. There's a lot you can go with it. So the AI stuff, I'm unsure, to be honest. I think there's massive opportunities with it in the AI content space, but it's being creative. It's not just using like AI content generators and pressing go.
Mm-hmm.
It's being creative. So we actually have a full-time guy. It's a guy in Finland named Jay, and he is his job is to test literally all the AI platforms and see how we can make content. And he's creating all kinds of content with it. And what he's finding is that there's like, for the most part, they're not worth using. Like for the most part, like koala riders, like saving some time, but most part he's just using ChatGPT itself. And still we're using just like the manual writers itself. So it kind of depends, like the type of content that you're trying to create. Are you just trying to get something out there to rank? Like, yeah, you can use the AI, but if you really wanted to like do what it needs to do as content, we're not finding AIs like solving all those problems. There's that. I actually still think SEO is quite easy. Um, it's just always been how you apply it. So I don't know if you remember. I think was it not this past one, but the ECF live before, like the year before. I did a talk, and
Hmm.
it's all about it's like using SEO to think outside the box. Like if you're doing the same thing that 100 other companies are doing and they're ahead of you, like why? Why? Like don't do that. Like but if you're thinking outside the box and looking at unique places to rank or unique ways to like drive traffic, then SEO is such a ninja skill. Like um say that that marketing agency I talked about I own part of earlier. If they try to rank for their keywords, such and such marketing agency, good luck. Like that's really hard. And also, even more, go and Google it yourself. See what Google's showing. Google's not showing agencies. You know what they are showing? People talking about what's the best such and such agency. Guess what? You can rank those way easier. And you don't have to rank your own site. You go and rank other people's sites. You put posts on there like talking about, what are the top 10 such and such agencies, and then you list those, and then you rank it. Guess what? You rank to the top way easier, and it drives the traffic back to your own platform. So you can do those, and you see a lot of the spammy niches. People have been buying these posts on like all these newspaper sites. Like you've probably seen like Outlook India, SF Chronicle. There's all kinds of them. Just go search like best CBD sites or like
Hmm.
buy Viagra and see what sites are ranking. And you'll see all of them. Um, like those things have been there, and they're just leveraging the authority of the site and ranking them. I don't necessarily think that's the best way to do it. Like those are pretty transient. But if you can do this on like real sites and whatnot, you'll be able to get a lot better results. And so you do something like that, and then you take the time and like build up your own site to be an authority. Um, Look at what Google's ranking is probably the best thing. Like whatever you're thinking about, if you're thinking of like your headline term, like that's a really tough thing. That's a really tough thing to rank because Google doesn't want to rank you probably. But if you start looking at all these long tails, like that's where you can become the authority while you're driving traffic with these other sites for like the headline terms. Does that make sense?
Totally makes sense. Yeah. How much has the algo changed for? Uh, I mean, chat with Steve Chu. He's ranked really well. He's done exceptionally well with content marketing. And his whole thing he's trying to optimize for is just answer questions as quickly as possible, as many as possible. It's less about narrative and storytelling, and it's really about just super punchy, Q&A almost in as close to a format that you can get to that. Is that what you're seeing too in terms of the content you're making, like that helps drive
Yeah.
rankings?
So I will talk like the content I'm making, and so I had a talk with this guy doing the content. I just talked about doing the AI.
Yeah.
He created a bunch of things, and I came through, and I like don't want to say I ripped it to shreds, but I gave it a lot of feedback because you see so many. Look at every post that's not doing well that's been written. It's like 3,000 words. Like, why is it not doing well? And you look and like it starts off with this giant preamble that says nothing. Um, and then to get to the actual goods is painful, right?
Uh-huh.
And it gives no personal takes. It gives no relatability. It's just like generic. Bleh. Like no one wants to read that. I don't want to read that. And so I showed him an example of something like I've written, and it starts off. The preamble is a paragraph, not a long paragraph. It's a paragraph, and in that paragraph, it's saying I tested X. This was my favorite based on X and X and X. I use this to do this. And so you can see like the personal experience, People like that. Google likes that. Because they want people who've actually tried it and tested it and stuff like that. They're looking for that. And then I go right into the goods. And like you check out the Wirecutter on New York Times and look at every single product review right out of the gate. Boom. This is the best Bluetooth speaker. This is the best. If you want to see why and all the other stuff, keep reading. But otherwise, this is the best. And that's what people want. So, that a few years ago, that the long form preamble stuff worked, but everybody hated it. I hate it. So like go right into the good stuff. And the thing is, let's take that Wirecutter example. If you give them the information from the top and you make the like the opening stuff like good and punchy and like builds trust, and you use those personal like I and me and I tested this and that, then the rest of the content doesn't matter because no one's reading it. It doesn't matter. It's just like getting that action out of the gate, giving those trust check marks that Google wants to see, and then providing the answer for the person, and you're good. And all the other stuff can be written by AI.
So is length even, obviously quality is most important, but is length, if you've got, you always hear about like good writers are able to, just ended up watching a river runs through it again. I don't know if you've seen that.
Oh, nice. Long time ago.
There's a scene where like the kid, he's homeschooled by his like pastor father. It comes to him and like, he rewrites this thing 3 or 4 times, and every time his father's just like, cut it in half, like axe it, like, get it to like 3 sentences. And that's the essence. And good writing, I think a lot of times, is how much you can say with the fewest number of words. So if you're looking at SEO articles, if you can really answer the question in 3 or 4 paragraphs, like, can you rank stuff that's really dense, or do you need to have that filler below? And filler is even the wrong word, but like, I guess my question is there still an advantage for doing long form content?
I'm unsure. I'll give different perspectives. So there are, a lot of the tools that exist, like Surfer SEO and I think Page Optimizer Pro. I don't know the others. I just use Surfer, and you'll put your article in there and it'll say you need to use these 300 words and these ratios and like to optimize for Google based on what Google's already showing. So there is that, and there is evidence that this helps. I have to think this will go away because it's bad users. Like no one wants to do this stuff. But there's also like some like well-known studies. Kyle Roof did a study. Just a test, not a study, a test where he basically put lorem ipsum on a site, and then he took the keywords that you needed and like implemented them. So just all lorem ipsum garbage with like, the right keywords like Bluetooth, speaker, blah, 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 Walmart, all that type of stuff. And it ranked. And it ranked. Yeah. So there's no right answer. I think probably you still need to do more of that content. You see exceptions all the time. Don't get me wrong. But I think probably you still need to do some of that, which is unfortunate. But I think it'll change. I think it's changing now. Yeah.
Great. Travis, this has been super fun. Thanks for letting me interrogate you about investing, portfolios, SEO, communities. We covered like pretty wide swath here. So this has been a lot of fun. And give people a shout out, like Travis.vc. That's the best place to learn about you, to sign up for your newsletter. Probably if you're curious about learning more about Travis, that's the spot to go to. But last question, I had to leave it here because I know we'd lose a bunch of people if I mentioned it earlier. But Bitcoin, got to ask you, you're a crypto guy. I think you and I are in approximately the same headspace for Bitcoin, given our conversation we had with a bunch of other people over lunch a year and a half ago. A little bit in the doldrums right now. Are you still holding it? You still bear bull? Not sure. What's your Bitcoin take? As we'll end on that.
I want to be very clear. I've never been a crypto guy. I have made a small fortune with crypto. I have never been a crypto person. Like I spotted the opportunity that was crypto, specifically DeFi, and got really into all the yield farming and all those shenanigans. And it was the Wild West, and it was so much fun, and it was so exhausting, and it killed my dopamine receptors for life. But but I never believed it, and I think this is the reason why it worked out so well for me. Is because I was never a true believer. Like I never drank the Kool-Aid. I recognized it for what it was. And so when I actually remember, there was like a week when a good friend of mine he's just not in this space. He's not in tech. He's like an insurance guy. And he called me. He's like, so I want to start allocating to crypto. How do I do it? I was like, that's not a good sign. And then the same week, my mom, who can like barely copy and paste, she just emailed me with a link to a CNN article about something. And the email title was just Dogecoin ? And I was like, top, I'm out. So I moved everything to stable coins, and I'm out. I hold very little crypto. There's a little bit, but not enough to like be meaningful to me.
So reading through the lines there, don't hold even Bitcoin. Don't really hold any meaningful amount of Bitcoin.
No, I don't. I think Bitcoin only works if everybody believes it works. There's no fundamental value. This is in my opinion. People disagree. There's no fundamental value to any of it. I don't see it as an inflation hedge. I don't see it as anything. It's kind of a hedge against like shit really hitting the fan short term. Like, it's hard to confiscate your wealth and get out, but those are pretty, those are sparse use cases. Maybe it's a hedge against like hyperinflation for like smaller nations type of thing. But that's just, like Argentina, I know that there's been more interest in Bitcoin because they're inflating like 10% a week. The US dollar, I don't think as much. I don't think there's anything about it that's actually an inflation hedge. Like, yeah, there's only 21 million of them, but just because there's 21 million doesn't mean anything. Be 21 million. What did Freddie say? Snarf coins, I think he said. Yeah. So that would be my perspective on it. I mean, the best inflation hedges will always be businesses.
Yeah, I agree. I agree with you on
I
that
keep
last
going,
one.
man. I keep going. You want anything else?
No. The Bitcoin's good. I still. So it's funny because I think we actually are a little bit different. I think Bitcoin still is. I still think holding it in like when I'm holding the percent that I do, 10 years from now, I think chances are probably 2 to 1, 3 to 1, maybe even 4 to 1. It's not worth anything or worth very little. But I still do think it still has a meaningful amount of upside in the case that you have a massive banking crisis or you have some issue where you have a massive worldwide sovereign debt crisis, something in that realm where people, if you ever had hyperinflation on a global scale, I think you'd see, of course, assets, real goods, and Bitcoin do really, really well. But to that point though, as well, like it's weird watching how it trades. Like the amount of shenanigans in the Bitcoin market, you've got to imagine they're just enormous because it doesn't trade. Like you'll see like inflation will come out, inflation will be really high. Well, you normally think like, okay, well, Bitcoin should rally on that, right? Because it's an inflation, like it's supposed to protect against inflation. But then you'll see it fall because the markets are coming down because they think the rates are going to get like increased. And so I feel like it's still more driven by general market dynamics than actually like the thesis if you're holding it for an inflation hedge. So
100%.
Yeah, which is super frustrating. So I still kind of been holding as like a lottery ticket kind of thing. Like you talked about that barbell approach. Like if I have anything in my portfolio that's going to pay off 10 to 1 from here, I think it would be that. But yeah, it's a tough one.
And so I have no confidence in like a bet that it will not do well. No confidence at all. I just don't have like I just don't think like the fundamentals are there for it. So, I hear the inflation hedge and it's like, oh, but your cash is going, cash is trash. Your cash is, deflating away. Like who keeps their wealth in cash? Like that's dumb. Keep your wealth in assets. Right. And so like if the value of the dollar, gets cut by 100 right now, like, yeah, there'll be insane panic, but like, Procter and Gamble still selling stuff. Walmart still selling stuff. It'll just be like a whole lot more zeros on things. Bitcoin, maybe. Yeah. So it's like, are the companies, will the companies be fine regardless? And like inflation does hurt companies for sure, but I'm also super diversified. Like I don't just diversify in companies. I diversify in like, all over the world and stuff like that. Like I'm hedging everything. I'm hedging my US exposure. Like I have a home in the US. I'm hedging that. So I'm not like concentrated in any one spot. You only got to get rich once. You guys got to like not mess it up after that.
Yeah. I found AI, of all the things I found, like people are talking about AI, using AI for writing content and all these other things. I feel like the thing that I have had the most, gotten the most utility out of AI is just having really long, in-depth conversations with ChatGPT about something I want to learn more about. Like, for example, I was thinking about like you're literally talking to one of the smartest entities that can distill all of the human information online and answer you quickly with, that never gets tired. You don't ask stupid questions. It's got infinite patience and it's super smart. So like the other day I was like, I wonder how like, I was trying to decide, like I was just putting some money in the markets, boring ETF style, but I was like S&P 500 or like Russell 2000. So I was like, well, how do these two indices perform over years relative based to like inflation, economic performance? And you can just ask it question after question. It's got all the data and it spits it out so fast. And I got through like it it's such an amazing way to level up, or like to really go deep with something quickly, that is, I mean, second to none in anything else I've ever experienced, apart from maybe talking with a real person who will let you sit there and interrogate them for like 3 hours on a topic. So
Yeah, 100% agree with you. It's great for that stuff. It's perfect for that stuff, and you don't sound stupid. Like sometimes, like I don't want to ask this. Yeah, I had a complicated contract I was looking at recently. It's like I don't know what this means, so I just put it in there and ask it. They don't look stupid, and an answer is great,
yeah, it's amazing. Travis, dude, thanks so much for coming on.
dude.
Really appreciate it. Check out everything we mentioned, of course. Travis.vc, smashdigital.com on the SEO side, snowballclub.com, and investing.io for the newsletter as well.
Also, thanks for doing e-commerce, Phil. Man, it's like the best forum in the world. There's if you're in e-commerce, the information is so dense, it's insane. There's no question. So thank you for that. This is
Thanks,
a
man.
real service to the world.
Appreciate it. It's we got a lot of good people in there that are they're throwing stuff out there, and just way smarter than I am. So yeah, it's a good gig to have. Feel lucky to have it. So
Yeah,
yeah,
buddy.
appreciate it. Good talking, Travis. Look forward to seeing you next time, and thanks for coming on.
Thanks, man. Pleasure.